I had a request to do a video on what my opinion would be as to what would happen if, say, Bank of America did file for bankruptcy, did collapse, or any other big, large bank, as well as a major credit card company, which of course is a bank anyways. And I advise some people to use a credit card when silver's down, pile in on it, use that credit card, and then make the payments that you would be making over the next 6 months to buy silver. Whatever you plan on buying in the next 6 months, let's say, buy it all at once now that the prices are low, pay off the credit card slowly, make the same payments per month that you would have done on the silver. Reason being, I looked at December of 2010, and then from that time till April, just basically 4 months later, it was up to $50 when it started off at like 30, actually 28, I think, when in December. So I said, if you would have bought at 28 on a credit card, all 4 months worth of purchasing you were fixing to do, it would have been a massive, fantastic move because it went to $49 silver. Had you been buying all the way up slowly every month, you'd have found that you're buying at 30, 28, 32, 35, 40, 45, 49, etc. And it doesn't even out quite as well. It's worth paying the little interest or whatever on your credit card to pay it off. That's what I've been doing the last couple of times. Now, let's say you're thinking right now, hey, that's a good idea. But man, I wonder if silver's gonna go a little lower. I'm hoping I see 25 or maybe even low 20s. Then I'll do it. And I've got a $10,000 limit credit card on standby. I've got good credit and everything else. It's sitting there waiting for me. Well, I'm gonna give you a little example of what happened when the housing market crashed. I think I mentioned this the other day. People had home equity lines of credit. Um, let's say you had a $40,000 equity line of credit, which means you have cash at any time. You could go to that bank and take out that money as cash and go buy something or do something with it. So let's say you put $10,000, and this is actually a story that I know to be fact that happened. And let's say you bought something for $10,000. Well, you still have $30,000 of your home equity line of credit left because they gave you 40 originally. So you can still tap $30,000. And then all of a sudden, out of nowhere, you get a letter in the mail from that bank or whatever. We're here to inform you, due to the housing prices, we are reevaluating loans that we've given out versus property price, and you are unfortunately, basically because you're getting this note, are going to have to settle for the $10,000 you've already spent. The other $30,000 that you thought you had is gone, effective immediately. So now you have $10,000 credit card payment, basically, that's already tapped out. Now you don't get the access to the $30,000 extra. That's gone. And all they're saying is we just want you to pay back the $10,000 that you borrowed already. You don't get anything above that. The same thing could happen with a bank credit card. Whether it's a Citi, MasterCard, Capital One, any of these things. If you're thinking you're going to have this credit card, like, oh, well, if things get real bad, at least I've got, $10,000 on this card, I've got another $5,000 on that card, I've got 15 grand to my name, so to speak, through a credit card company that I could use in an emergency. But I'm almost certain that on or about the time of the emergency, which is like when the banks are collapsing, being destroyed, which is probably the very near future, of course, you may end up getting some of those notes. Then again, you may not get notes, and it may just happen, and you go to use the card, and the money's not there. So now you don't have a backup plan that you thought you had. Well, I only use credit cards for emergency use. I only use them for emergencies. Why we had car, $2,000 transmission problem. I'll just put on the card. I don't have $2,000 to be spending all at once. I'll put it on the card and make the payments on the card. That's what I use it for. Not if that card goes away, you don't. And as the banks, which have to have certain reserve requirements in order to have X amount of loans out there, and normally speaking, that's 9 to 1. If they've got $1 million in their bank, the banks do, then they can loan out basically $9 million, roughly, out of nothing. It just happens. Here you go, $9 million to loan out to people, as long as they keep the $1 million in there. But when the $1 million starts dwindling, 900,000, 800,000, 700,000. Right? I'm just giving this for an example. They still have the same loans out there. So they had $9 million worth of loans on that $1 million reserves, right, that they had. The loans are still out there, but the $1 million is gone. It's now going to 800,000, 700,000 because people are pulling their money out. Bank stocks are diving. People are getting nervous. They're pulling their money out. So normally speaking, the Federal Reserve would say, hey, bank so-and-so, we've noticed, 2 months now or whatever it may be, that your reserve requirements are pretty severely in the red, like pretty bad. We need you to come up with capital, more capital, so you can meet the capital requirements of those reserves. Okay, well, Warren Buffett just gave us $5 billion, and we're gonna sell off this company like Bank of America already did once, and we got a bunch of money from that. Now their stock's diving. There was almost 10% down today. Bank of America specifically. Morgan Stanley was down a pretty good amount too. Piece of garbage that they are also. All of these guys are garbage. So, what would happen to your savings and your checking account? Well, technically speaking, we know it's all insured. As long as it's some number, which used to be, I think, $100,000, and then they upped, or whatever it was, 150,000, then they upped it, I think, to 250,000 FDIC insurance. So if you have less than $250,000 in your bank account, most likely anyone watching this video right now, that probably applies to you, you're still covered by the FDIC. And if one of these big banks or several big banks collapse, the FDIC will still have to be able to kick in and pay all these, the money that was in there. Now, something that's interesting, in 2008, I started paying attention to the FDIC. They have what is known as the DIF fund. That is basically their money to back guarantee all of the banks. Now, like any insurance company in the entire face of the earth, on the entire face of the earth, whether it's car insurance, homeowners insurance, whatever, if a severe amount of people, not even everybody that they have under as customers, maybe a quarter of the people under any insurance program, whatever it may be, homeowner insurance, we'll just say car insurance, 25% of the customers have an accident today, right now. They do not have the funds to cover that kind of accidents because there's simple statistics. Well, we don't have 25% of our customer base accidents on one day. Come on, that's crazy. That's correct. That's why they're allowed to oversell basically the insurance, reaping all the profits for 10, 15, 20 years long, reaping them in, giving bonuses, everything else, as long as we keep a little pile over here to keep within what the statistics show, a few $1 billion to pay, claims, and then all of a sudden, the unthinkable happens. 25% of the cars got in an accident. We can't cover it. Immediate Chapter 7, whatever, chapter bankruptcy. Have a nice day. But you're still going to pay our accidents, even though you're collapsing, right? No, actually, you're screwed. But I've been paying you for 5 years. I've had you as an insurance company for 5 years. Sorry about your luck. Sorry about your luck. So, if the FDIC.gov, right? It's technically a government agency, supposedly, yet, by law, it is only allowed to go to the Treasury if the DIF fund goes away and it's in the negative, which, by the way, it has been since at least 2009. It's been in the red like the whole time, and it keeps going. If you go to FDIC, matter of fact, just for the purpose of this video right now, I haven't been here in a little while. www.fdic.gov, and I want to see what banks got closed last Friday. And it looks like there was just one, believe it or not. Usually there's several. First International Bank, Plano, Texas. So I'm going to click on the press release. At the top, there's a press release. Click on it. PR such and such number. Scroll down towards the bottom, and it will tell you the FDIC estimates that the cost of the Deposit Insurance Fund, the DIF fund I just told you about, will be $53.8 million. Compared to other alternatives, American First National Bank's acquisition was the least costly resolution for the FDIC's DIF fund. First National Bank is the 74th FDIC-insured institution to fail in this nation this year, and the first in Texas, actually. The last FDIC insurance institution closed in the state was the La Costa National Bank, which was on February 19, 2010. Appreciate you giving me that information, FDIC. But many times you can go here Friday. Sometimes they do it late Friday, after the markets close, of course, whatever. Saturday, come around, go to FDIC.gov, and just take a look at the list of banks. And click on each one, press release. It takes you right to the press release. Click on the press release, and scroll to the bottom. It's towards the bottom where it says, we estimate this is how much it's going to cost the DIF fund. And I found that over and over and over again, more so than not, I would see around $500 million. $500 million expected to cost the DIF fund, the FDIC's fund. That's the same. That basically is our insurance fund for all of us with our money in the banks. Now, by law, they're only allowed to go to the Treasury window when that DIF fund is basically crap and gone away. It's been used up. In other words, 25% of the cars got in an accident. That fund's gone, and technically they'd be bankrupt right now. But via the laws that have been created, they have an open window to the Treasury, directly to the Treasury, in which they can borrow $500 billion dollars. $500 billion, I believe, is the magic number. Now, they were in the red since at least 2009, and I have not been watching every single Friday how much that fund's been destroyed. Specifically, how much. And if a bank like JP Morgan or Bank of America, one of the big 6 to 9 whatever banks, we'll call it the top 10, if one of the top 10 or two of the top 10 banks fail, it's almost going to be close to saying good night DIF fund. And the law states only good for $500 billion. That has not been changed to the best of my knowledge. And if it has, if it was slipped into the health care bill or something else to where it's now wide open and there's no more $500 billion limit, someone let me know so I can correct myself, I guess, by saying what I just said. I have not seen anything that took that away. I believe it is still $500 billion allowable. So that's basically telling you we do have an insurance company called the FDIC, and if it goes to big failure, we have another huge insurance company known as the federal government / Treasury, in which they can tap up to $500 billion. It's written into law. It's a done deal. But don't the banks, the major players, just the top 10 banks, equal into the trillions of dollars? Yeah, they do. Absolutely. So if that's the case, and there's only half of 1 trillion, 500 billion, then what happens to people's money that are in the banks should a complete catastrophe take place such as that, where Bank of America fails, JP Morgan fails, something, and then it's done instantly? Just, oh my God. Now, granted, the FDIC would have to pay up to $500 billion worth of claimants or whatever, you and me, whoever ran out of the bank first, whoever filed a claim with the FDIC first, kind of thing. But there's not $500 billion there because they've been tapping whatever since 2009. Granted, $500 million here, sometimes $1 billion in 1 week, every now and then. Sometimes it's just $200 million. Again, Friday it was only $53 million. Having said that, that's still a lot. Almost 54, $53.8 million. $54 million for one little bank, little small bank, that costs ultimately the taxpayer. And it says, compared to other alternatives, this acquisition was the least costly resolution. Kind of like what they're doing with, printing money out of control. This is the least hurtful thing we could do. We're going to just print money. It'll be slow pain, and since you're experiencing slow pain, it all builds up to massive, devastating pain. But we don't want to hit you with the massive, devastating pain now. And by the way, if we did do it now, it wouldn't even compare to what the worst part would be over here. But we don't work that way because we want to get reelected and stuff. So we want to kick the can down the road and blame it on each other and create new tea parties and this party and that party to try to trick you into thinking other stuff while we're concentrating on just slowly letting this thing unravel, and it's building pressure. So, as I've said many times, I keep very, very, very little money in the bank. In other words, normally, not even in recent times, because I've gone even way down from what I'm about to tell you, but what I'm going to say is I normally like to keep 1 month's worth of bills in the bank. Maybe a little more than that. That's it. Recently, I've been keeping that even lower. So, is your money safe in the banks? I just told you what the law states of how much they can tap. You also know how much money all these big banks happen to have, to the tune of trillions of dollars, as far as that our accounts equal, the money that we have in their accounts of these big banks. So I would advise you to do the same. If I woke up tomorrow and they said, oh, FDIC fund just got tapped out, big bank failed overnight, all the insiders got their money out first, you bozos were sleeping in the middle of the night, sorry about your luck, peasants. I wouldn't even be hurt. I wouldn't even be bothered. It wouldn't even make me mad that, hey, you got my money. There's so little in there right now on purpose that it wouldn't bother me. I don't care. Some people watching this video right now are saying, well, I live paycheck to paycheck anyways. I don't care either. And I understand. So if you do have money and you got a nice savings account and this and that, man, I would keep it to a minimum. Because again, if in an event of a collapse, people are going to want their hands on cash. Are the credit cards going down? And my debit card, is it going to work? Is the JP Morgan EBT card, food stamp card, is it going to work? Oh, I better get cash out, this and that, right? Wouldn't be a bad idea. And remember, they're not going to broadcast in advance to you to let you know, hey, go get your money out of the bank now. Something's going to happen tomorrow. It's going to be guys like me saying something's going to be happening sometime out in the future, near enough future that you need to be concerned. I can't give you a specific date because I don't know. Don't have a magic ball. That's for sure. So, but looking at things, looking at history, looking at the way things are going right now, it's not looking too pretty. So I would not keep a lot of money in the bank if it was me. If you're sitting on that cash and it's just sitting there, for God's sakes, what are you doing? Go get some silver right now. Yeah, but it might go down to 20 or 25. Get it now. And if it does, get some more. Sure. When you see where silver and gold ultimately end up over the next few years, just a few years is all it is. And maybe much sooner, because if a giant collapse takes place and then all of a sudden JP Morgan is forced out of its short position and it just gets basically wiped away, where could silver and gold go? It could happen rapidly and soon. But then again, it may not be rapidly and soon. It may be 6 months out, another year out, it goes higher. Another year out from there, it goes even higher. 3-4 years down the road, we're at $300 and $400 silver. Again, are you going to be that upset when you're sitting here debating, should I go to $20? Should I wait to see if it goes to 20, or should I buy at 30? I've been buying all the way up. Like I said, it's like an investment for retirement. You start a job, I'm going to be here for 10 years, 20 years if I can help it. I don't care what the market is. I'm just going to continue putting 10% of my check into my little fund here. Whatever happens, happens. I know the markets go up and down, and it doesn't matter where I get in at. It's just going to start right now. Why can't people have that same mindset with silver? I don't care if you started when it was $40 just recently, and now it's down to 30, and you're, oh man, that sucked. Stick around a while. Stick around a short while and watch what happens. I mean, we still have 3 months left to the end of this year. And I'm here to tell you, due to these things happening, the financial news, Greece is going to collapse. They're already talking about these printing presses being delivered to Germany to create the Deutschmark again. What do you think that's going to do to global markets when that's finally announced? Greece is done. All the austerity that they shoved down the people's throat didn't matter anyways. As I said and other people said, you're just hurting people for no reason. It's going to collapse anyways. It's just stupid. So, what do you think is going to happen to the euro? I'll tell you exactly what Lindsey Williams, 100% accuracy, said would happen, that his oil executive friend told him would happen specifically to the T. The EU will collapse first. Now, he didn't say the dollar EU, the euro per se, or specifically the European Union, but pretty clearly, if either of those go, the whole thing's done. More specifically, if the EU goes, the European Union, such as Greece defaulting and Germany saying, so we're out, we're getting our Deutschmark back, there goes the entire EU, which also means there goes the euro. I mean, obviously. He said you would have a matter of weeks, possibly at best, when you see that occur, to get out of your paper assets of any type. He also said paper dollars, stocks, anything in paper, period. And he said you need to convert it to gold and silver. Don't wait for that to happen to convert it into gold and silver. Start doing it now. Sure, it's not bad to have some freaking cash on hand, but if you're sitting on thousands and thousands of dollars you just pulled out of the bank and it's sitting there, it's getting devalued as you sit here. Well, what do you mean it's getting devalued as I sit here? I just saw the dollar index is 80. Bozo Joe, what are you talking about? Well, remember, Bozo, whoever happened to call me Bozo that I can't hear right now, there's somebody out there, probably Bozo Beast, but the euro and the US dollar, they're both ships in the water. They both are taking on lots of water because they both wrecked and they cannot be repaired. They patched them and they patched this one, and it's not going down as fast. It actually looks like it's rising. Hey, the euro's up today. Dollar's down today. When in reality, no, they just patched up a few holes. It's not sinking as fast anymore. This one, on the other hand, still has the same holes. They're not done patching it up yet, so it's going down faster. That's it. It's an illusion. It's not that either of them are going up. None of these currencies are going up. They are all going down, and it is a race to the bottom, so to speak. So right now, the euro is getting crashed, getting crushed with all the news over there. U.S. dollar, we're pushing 80 on the index. We're getting so close to 80 again. Man, we were just down to 73 not too long ago. We're already up to 80. Oh, man, that U.S. dollar is great. No, it's a sinking piece of garbage ship that's sinking at a decent speed, but this one just got, it started sinking a little faster now. The EU ship or the Euro ship. That's all it is. So don't anybody ever come in here and say anything, oh, dollar index. If you mention that word, that's like instant ban. I'm just, because of the nonsense is so at the level beyond nonsense. Like, I don't even know what is after that I just have to ban you from commenting. Because if you even write something so nonsensical as that, you have no business even researching this stuff or even coming and watching my videos. You have no business. You're better off going home and playing Xbox or something, World of Warcraft, which I used to play. I tried getting on that game many months ago. Let me get back into World of Warcraft. As soon as I start playing, the feeling over my body of what in the hell are you doing? This is so dumb. There's so much more important going on. Get the hell off this game. And I'm sitting there walking around on my little character, and I feel a little bit sweaty almost. Like I feel so odd. Just so weird. That's it. Done. Erase the game. Get that crap off my computer. I'm done. So, I mean, and I'm, by the way, have been for many years, at least prior years, a big time computer gamer. I played Xbox for a while, that kind of thing. I had a couple Xboxes, sold them, and was heavy duty into computer PC gaming. Powerful video card, the whole 9 yards. Man, it's hard to do it right now with all this going on. So, anyways, I hope what I've said to you tonight makes sense. Do not trust the banks. Anyone who's ever trusted a bank in any period of history on the entire face of the earth, through any amount of history back you want to go, who had trust in the banks, ended up losing. Always. Even when there was gold and silver as money, and they stored it in these little banks, they were just like deposit places, hundreds of years ago, right? And they got the bankers, which you could still call them that, would basically have a vault, and the rich people would come in and hand them their gold and say, I've got so much gold. As Smokey said on Friday, I got so much gold, I need another person just to count it for me. We'd love to count it for you. We'll keep it safe in our secure vault. Okay. And they would notice, man, no one ever comes and gets their gold. Like, yeah, they'll come every now and then get a couple, bars or whatever it was at the time, but they've got a stack. I'm talking, they are stacking. Well, what if we lease that gold out to other people? We could charge a fee to do that. And these guys aren't coming to get their gold anyways. It sits back here, man. Yeah, good idea. So the bankers wanted control of the people's money and started to lease it out and lend it out. And this guy would come in and deposit gold here, and they would just give him a piece of paper saying, yeah, he's got, 500 ounces or whatever of gold here, and that's it. He can then take that slip and go to another bank somewhere else, show them that certified, which, well, I call it certified, but, we're talking hundreds of years ago, king stamped, whatever, stamped thing, piece of paper, I need 5,000 ounces. Well, they have gold there because other people brought gold there. So they always had to have gold at both places, and they knew that everybody wouldn't come in and get their gold at the same time. So they could allow this guy who really deposited 5,000 ounces of gold in this bank, did not deposit 5,000 ounces of gold in that other bank, but he could still go to that bank and get his gold out if he needed to with that little slip. But why would he want all of his 5,000 ounces? He wouldn't. I would like, here's a 5,000 ounce certificate, but give me 10 ounces. Okay, and then they give him another slip. You now own 490 or whatever. If it was 500 ounces, now you have 490 ounces. Here's your piece of paper. So that's, thus the banking, fractional reserve banking was created. And it didn't work out for those people too, because the day came when people got scared and economic times of, hundreds of years ago got bad and people were nervous. Give me my gold. We don't have it. And by the way, there wasn't an FDIC insurance back then. They do that now so that if you ever refer to that history, well, we have FDIC insurance now, and we don't. It's not gold; it's paper money, so we could just print it if we had to. Really. Oh, okay. Oh, and they're gonna print it. What they don't tell you is when that day comes, we have to print it. We couldn't print enough money for probably years straight to give America, every citizen in America, the actual money that they have in the bank. Actual physical paper money. Wouldn't happen. I mean, I don't even know how long they'd have to put the printing presses on to do that. And are people going to sit back and say, okay, I'll wait. Yeah, I'll just chill here for a little while. And let me know in 6 months when you get enough paper money printed to give me mine. In the meantime, I'll just starve to death, die, have no way of doing business because I'm waiting on the paper money. No. They would basically tell you, everybody, you cannot go to the banks and you cannot clean out the banks. You are limited to X amount per week or X amount per month of withdrawals. You cannot clean out your bank account effective immediately. Mr. President Obama, have a nice day. And then you think, I'm running to the bank now. It's too late. Too late. The rules are already in place. But if you had nothing in your bank account to begin with and you had a stack of silver or gold at your house in a safe bolted to the floor, you could sit back and laugh at that. Matter of fact, you could take your little video camera or whatever and say, hey, I'm going to go out to any near bank. Matter of fact, let's go to the closest Bank of America or JP Morgan Chase Bank and just film all the sheeple. Hey, sheeple, I was that guy on YouTube. One of your friends probably sent you a video and you told him to stop sending him that crap because you don't deal with conspiracies and nonsense. Yeah, that was me. I was that guy. My name's Jason Ip4. Listen, what are you guys doing out here right now? What the hell's going on? You guys, is some kind of party at JP Morgan? Are they opening, are new accounts given like a new microwave oven or something? What are you guys doing out here? And they'll look at you with just a dumb zombie face, you know, and probably want to punch you in the mouth for saying that, but it's their own fault. That effing bank's got my money. The doors are locked. Police are barricading the damn place. Well, just so you know, even if the police weren't here, you could go in and do whatever you want anyways. There's no money in the bank. It's not there. Even if they left the vault door wide open, which they probably will do overnight, maybe you can flash your flashlight in there at night and see that it's cleaned out. It's gone. You only thought you had money in their bank. You never really did because of fractional reserve lending. And those who get there first get what they have first, and everyone else is sorry about your luck. That's all I got for you. Hope this helped. Have a good night, everybody.